What is up everybody, Gifford here and welcome back to another stock market video, and today we're going to be talking about Palantir stock. So we're going to have a look at a summary and also go over some important details, and then at the end of the video I'm going to tell you what I'm going to do with the stock, if I'm going to be buying, selling or holding. As always, I appreciate a like on the video as it helps the channel out, and if you're interested in investing, feel free to subscribe. With that said, let's get on with the video. Having a look at right now at the charts, Palantir, ticker symbol PLTR, is currently at $19.83 and it's up today at 7.89%. And Palantir has had a rough time recently, because if we go to the 1 year charts, we can see that it's actually down by about 16%. So moving over to CNBC, we can just look at a quick summary of Palantir, which reads, Palantir reports 49% revenue growth for its first quarter. And the key points they have here is Palantir, the maker of software and analytics tool for the defense industry and large corporations, reported 49% of revenue growth for the first quarter, beating Wall Street estimates. It also came in line with earnings estimates. Palantir says that it expects to bring $360 million in revenue into its second quarter compared to the estimates that it had, which is $344 million. So moving on to the Palantir investor relations page, we can see here the Q1 2021 earnings release, and if we click this button here, it will bring up their report for us. So I've just put it into an easily readable view here. So let's have a look at what they say about the Q1 2021 highlights. So total revenue has grown by 49% year over year to 341 million. So that's really good to see that the company is growing. US commercial revenue grew by 72% year over year. The US government revenue grew to 83% year over year, which is very good. They've got good cash flow, up $404 million with some pretty good margins in there. They did, however, report a GAAP net loss per share, diluted by 0.07 cents. But that's okay as a growth company. I don't expect them. It's all about, to me, it's all about the revenue and them to be able to scale that. And also adjusted earnings per share of 0.4 cents. They go over a lot of financials here, but I'm not going to go over this. I was actually watching a very good video by someone already on YouTube that goes into these numbers. So what I'll do is I'll actually put a link to their video if you really want to have a look at a deeper look into their numbers. But I just want to go through, I've read a lot of this report already, so I just want to go through probably about 2 slides of that's very important to me and what I'm going to be doing with Palantir stock very shortly at the end of this video. So the first slide I just want to show you is page 30 of their 48-page report, and it says here that we ended Q1 with 2.8 billion in total remaining deal values, up 40% year on year. So we can see here that they've got 15 deals worth over $5 million and 6 deals worth over $10 million, and this is really good because this is recurring revenue that's going to continue on, and this is how their business is with the ERP stuff. It takes a really long, once you implement it, and it can take really long. Once you already got it in your system, you're going to be having to pay for this business for many years down the road, because it's going to be integrated into your own systems, and it's going to be very difficult to take off once you depend on this. So the good recurring business model in this means that the company is going to have cash flows coming in year over year. So the second slide I want to look at is actually their revenue and where it's projected to grow. So we can see here that they're growing a decent amount by 49 year over year, which is 341 million. And we can see last year that they've grown from 229 million. Okay, so this is what I want to point out. If we want to know where that 49 comes from, basically what we do in our calculator is that we take away 341, take away the 229 million, that gives us 112 million is how much they've increased by. We divide that by the 229 figure of last year, times that by 100 as a percentage, and we can see it's 49%. Same as that one there. So that's very good. We've calculated all that. But the one thing that I'm not too happy about is, even though this growth is very good, I don't think it's big enough for what we're paying with the price. So bear with me. We're just going to do a quick calculation of what the projected revenue is for the whole year. Just remember that they're going to be increasing this, but let's just take the 341 million. So 341 times it by 4 quarters. So times it by 4, and that's $1.364 billion. Okay, so this figure here is what I'm going to use for their total projected revenue for 2021. Bear in mind that they are going to increase that over it, but we're just going to use this numbers to simplify it. to work out to see if the price of buying Palantir is a really good value right now. Right, so we can see here that the market cap is currently $37.37 billion. So let's type that into our calculator. $37 billion, and then we divide that by the revenue that I projected for them, so memory equal, which is $1.364 billion, and we can see here that it gives us a number of 27.4. So 27.4 is effectively what I calculate how many years they would take of their projected revenue to be able to fit their market cap. So what that means to me is, even though they had good results of 47 times of increasing that, it's not very good value. It's going to take them over 27 years to be able to do that. So as a growth stock, I expected a little bit more, and this is why I actually sold some Palantir at a loss. Actually, wasn't very good. I expected more, and it didn't turn out to be like that. Okay, just going over to my stock portfolio, you can see that I'm significantly down. Actually, so there's $3,500 in there, the current value, and I'm down by 20%. It was actually more than this before, but I've actually sold some. So we can see the average cost I've been buying is $24.89, and the current cost is just under $20, and it's about 17.6% of my portfolio, with I have 180 shares. But I actually sold 40% of my shares in Palantir after I saw that the growth was not there. I'm gonna sell some shares off and hopefully buy back in if it comes lower, but yeah, I'm just not happy with the growth. I'm not happy with 27 plus years to be able to generate that revenue, or waiting in the short term, or paying these prices for the stock. So just for transparency to all you guys, you can see here that on the 13th of May I sold 27.26 stock at $19.99, and then the next day after that, on the 14th, I then sold another 40 at $19 at a loss. To me, it's not really worth holding on. That's just my preference. You guys do your own numbers, do your own due diligence with the stock and how the way you'll trade. I'm just sharing this with you guys of what I'm doing. So this one has not been a good trade for me. But anyway, so coming back to the stock chart again, so I just want to make it clear from my perspective that paying $20 for the stock is too expensive for its market cap. I don't think for this growth I want to be paying that amount of money for a $37 billion company with only a growth of revenue that big. So if we just come back to my number that I projected, let's just say they do really well and they double this. So let's just times it by 2. So in 2021, they double and they do ridiculous growth. They double all their revenue in these quarters, and it just keeps going up. So let's now say that they are going to be making $2.73 billion for the year 2021. And now let's put that into this market cap right here. So I'll just do a memory plus. Okay, so now let's do the calculation of 37 billion 48. Divide that by the new revenue for 2021, which I think it is, the double revenue, and that equates to 13.7. So this number here is, if even though they doubled their revenue, my expected revenue, that I think it's still going to take 13.7 years for them to be able to reach that. So it's just too high. The market cap is too high to be paying this much amount for Palantir, and I was wanting more growth, so therefore that's why I've sold out of my shares. So I hope that makes sense. Let me know in the comments. Let me know if you don't understand anything, and I can just run through those numbers again. This wasn't the growth that I expected from them, and that's why I'm having to sell at a loss right now. Anyway, that's enough for me for this video. Thank you for watching, and as always, make sure you do your own due diligence in the stocks that you buy. Hopefully this has been helpful to you about what I'm doing with my Palantir stock. Let me know what you think in the comments. And also, it is 5 o'clock in the morning, and I am sorry that I haven't put any videos out recently, but I have been working 60-hour weeks, so there's not a lot of time in there. I'm hoping to do a couple more videos out in the future, but a little bit shorter ones, so then I can actually do a lot more of them over in the week, as opposed to not doing any for like a whole week or so, and trying to make larger amounts of videos. So pretty tired. Yeah, so I'm just going to leave it there. Thank you for watching, and I'll see you in the next one. Goodbye.